Well, good day, subscribers. Hope you guys are having a great day out there. As always, if you're new here, I am Jeremy. This is the Financial Education Channel. Today, I'm going to teach you how to become a better investor in 5 tips I have for you guys. Whether in 2019 you've had a bad year in the stock market, an average year in the stock market, or a good year in the stock market, don't matter what, these 5 things will be highly relevant for you, and these 5 things will hopefully make you a much better investor going into 2020 and future years. These can be applied to everybody out there. So without further ado, hope you guys enjoyed today's video. Make sure you smash a like, make sure you subscribe to the channel, and let's get into this. Alrighty guys, the first thing up here that you can do to become a much better investor in the stock market is read more. But this doesn't just mean read everything, okay? When I talk about read more, here are the things that you need to read to become a much better investor. You need to be reading more annual reports of more companies. You need to be reading more quarterly reports of actual companies, okay? You need to be reading more about industry trends and where certain industries are going and what's the next big opportunity for investing in the stock market. These are the sorts of things you need to be reading. It doesn't mean let's just get on the CNBC app and read a bunch of pointless articles about, who thinks the economy might crash and who thinks the economy might grow 2% next year and who thinks the economy might grow 1% next year and all those sorts of things. No. If you want to really make a lot of money in the stock market, you need to be looking at actual individual companies that, regardless of kind of what's happening, whether the economy grows 3% next year, whether it grows 1%, whether it doesn't grow at all, you want to be finding the type of companies that have stories behind them and have investment theses that you can build around these companies that make sense regardless of what type of climate we are in economically. And in order to find those type of companies, you have to be reading these annual reports, you have to be reading these 10Qs and whatnot. I know it might be a lot more fun to read a 15-minute article on CNBC on why this guy thinks interest rates are going to go down next year. I know that might be more interesting to some people out there than going through a 100-page annual report or something like that. But if you're in this to actually make a lot of money, you need to be focused on reading those 10Ks, reading those 10Qs, and actually doing the research work necessary and being able to build out a bullish thesis around companies. And if I look at all the different companies I'm involved with, I've done that for them all. If I look at some of my biggest investments, like a Facebook, right? Like a Tesla, these are companies I have massive bullish theses around that I've read into extremely in depth, and I've been able to formulate opinions based upon them. If I look at semiconductor companies like Cirrus Logic, which we're up 100% on, and we've been in for a year or two now. Skyworks Solutions with their type of 5G opportunities. All these type of companies I've read into extremely in depth, so I could have an understanding of those business models much like an executive would, and that's where you need to be reading if you want to really take your investing to the next level and become a really good investor or a great investor in the stock market. Flat out, you need to read more, but read more of what actually matters, which is businesses, trends in businesses, and where underlying businesses are going, as well as things about executives at that company, board of directors and whatnot, okay? That is first thing. Let's get into the second thing that can make you a much better investor in the future in the stock market. Alrighty, the second thing that you can do to become a much better investor in the stock market and get much better returns from the stock market is put everything in Tesla stock. No, I'm just kidding. Alrighty guys, for number 2 here is you need to stop buying stocks because you feel like you have to buy stocks. This is something that gets me and gets a lot of investors, that basically you'll build cash levels, right, from whatever your income sources are. Then you have this money, and sometimes we feel like we have to deploy that money out and we have to get in stocks because we know, generally speaking, whatever stocks we invest into, more than likely we're going to make a lot of money on those stocks, we're going to get a good rate of return and things like that. But sometimes it's best to just kind of wait in the sidelines till you want to invest into that stock. There's a difference between buying a stock because you feel like you have to just buy a stock and buying a stock because you want to buy a stock. Whenever you're actually sticking your money in a stock, you should feel essentially like you are super thrilled to give that money to your brokerage account to throw into that stock you invested. You are so excited to do it and you want to do it. Not because oh, well, I know I have to invest money because in order for my money to make money, I have to invest in and I have to put in these stocks or something. You shouldn't ever feel like that. And I understand there could be pressure, especially when you build cash levels and you're like, man, this cash is just sitting in my accounts, it's not doing anything, or I have it in a savings account, it's getting me 1%. I gotta just deploy it in stocks. And the trick is not to just deploy money out into stocks. The trick is to make sure you're making sound investments and making sure each time you buy one of those stocks, it's absolutely because you want to do it and because you believe you're gonna make a 2x on your money over the next 3 to 5 years, or 3x on your money or something like that. And you're super excited to invest that money, not because you feel like you have to. And I know even in like my private group, which I have like a public account in that private group, and sometimes I don't make moves for a while, and sometimes I feel like, man, I feel like I have to make a move in that account or something because it's kind of boring not making any moves. But the trick is sometimes boring works in the stock market, and investment is the name of the game, and making sound decisions, not making decisions based upon, oh, I just have to do this, so let me just make a move or something like that. Make sure you're making moves because you want to make moves, okay? Let's get into number 3. Alrighty, if you want to become a much better investor in the stock market, number 3 is definitely going to be very important to you, okay? Basically, you need to limit your investments in unprofitable companies. There's not a problem with buying maybe one stock or maybe even a second stock that is unprofitable, especially if you hold 10, 15, 20 stocks in a portfolio. But where you're going to end up running into a lot of trouble is if your entire portfolio is consisted of unprofitable companies. And I see time after time again, people build their entire portfolio around just a bunch of unprofitable companies, and generally speaking, these investors generally much underperform the stock market in general, because even if one of them goes pretty good, let's say they have 4 or 5 stocks and they're all unprofitable companies, even if 1 or 2 of those goes good chance that the other 2 or 3 are probably going to go bad, and you're probably going to lose a bunch of money on them. There's nothing wrong with, if you see a huge opportunity and there's an unprofitable company out there, there's nothing wrong with investing some money in it. But when your entire portfolio is consisted of a bunch of money losing companies that just have stories behind them, that's not a good thing. The majority of your portfolio should be consisted of stocks that are more like value oriented in terms of they actually make profits on the bottom line. They actually have good management teams. They're not just some new company or something like that, okay? Nothing wrong with taking a flyer on a growth stock and investing some money in for that stock that could potentially 5x down the road or 10x or do some insane things. But make sure your entire portfolio is not consistent of those companies, because keep in mind, most of these unprofitable companies either end up don't making it, or they end up just kind of floundering and going down and going down and going down. For every one of the great companies that was unprofitable and then started turning a profit and built into a huge thing, there are probably 10 or 50 companies that we could go through that ended up going down and down and down, okay? So make sure you're not just investing in a bunch of unprofitable companies. Stick your money in a bunch of profitable companies, and then if you want to buy 1 or 2 stocks that are unprofitable that you believe a lot in for the long term, fair game, but don't be having your entire portfolio in a bunch of unprofitable companies. I just see time and time again it ends poorly for investors, okay? Let's get into number 4. Alrighty guys, the 4th thing that can help you become a much better investor in the stock market is make sure you're not just looking at, when you're looking at dividend stocks, for those of you guys that want to make dividend cash flow, the stock with the biggest dividend yield is not usually the best stock, okay? If you're judging dividend stocks and you're like, okay, I want to make this dividend cash flow and I want to make it bigger and bigger so I can invest even more money next year and more money the following year, that's awesome, okay? But let me just tell you, if you're looking at dividend stocks and you're thinking, well, this one's the best dividend stock because it has a 5% yield, and this one over here pays a 4% yield, I can tell you, you're making a big mistake there. Just because a stock has the biggest dividend yield right now does not mean they will have the biggest dividend yield next year or the following year or 5 years from now. You should really be still looking at what the underlying business is doing, who's going to expand their business the most likely over the next 3 to 5 years, who's going to be making a lot more in profits, because you know what dividend companies do generally speaking when they make a lot more money on their bottom line? They up their dividend much more substantially. So if you're in a great company that is going to become more and more profitable, good chance they're going to continue to raise that dividend year after year and quite substantially. A stock that I have in my mind that is going to become an absolute dividend beast, and I've been talking about this stock since it was like $100 a share, and I was like, this stock's going to become a dividend beast. Now the stock is like $250 or $270 or some insane number like that now, and it continues to rise, and with 5G iPhones coming out next year, Apple stock, okay? Apple stock is absolutely going to become a dividend beast because Apple profits are going to continue to increase. They're buying more shares back. That makes their EPS go higher, which means they'll have even more and more money to throw off and raise that dividends more and more and more. And people that were buying Apple stock at $100 when I was talking about it, 2-3 years ago, those people got in at a much, much better dividend yield. And think about, as Apple continues to increase the profits, how much a lot of those Apple shareholders are going to see their dividends increase and increase and increase. And if you look at what they bought their shares at versus what the dividends will be yielding in 2 years from now, 4 years from now, 6 years from now, it's going to be substantial dividend yield in the end. It could end up being an 8, 10, 12% dividend yield based upon what they bought their shares at, based upon what Apple will likely continue to raise their dividend over in future years, okay? So just because a stock has a high dividend yield now doesn't mean it's the best, okay? You really should be focused on, do they pay a consistent dividend yield, or are they consistently raising it? What was their balance sheet at? And are they going to be more and more profitable as these years go on? What's your opinion on that underlying business? You get an opinion based upon all those reports you read, okay? Let's get into the last one, number 5. Alrighty guys, the fifth thing that you can do to become a much better investor in the stock market, this has been statistically proven time and time again, that when an investor does this, they find that they can get 2x to 3x better returns than they got before, and that is smashing the thumbs up. Alrighty guys, for real, you gotta dig on these CEOs, okay? Whenever you're thinking about buying a stock, you need to look at not just the entire executive management team, but specifically, who is the CEO leading the company that you want to buy shares in? This is extremely important. You need to dig around, look at their track record, look at what other companies they have worked for. Did they have success with those companies? Did those companies have more and more profits come in over time? Have they worked in the public space? Because if there's one thing I have seen time and time again in the stock market, it is CEOs completely ruin companies and CEOs completely build companies to things you never thought were possible and just like achieve some amazing things out there, okay? You need to really be digging in on these CEOs and looking at their track records, look at what they've done in the past, what have they done since they got at that company? Is the CEO really focused on building a great culture around a company? A culture is so important around a company. You build a great culture, the CEO builds a great culture around the company, and it can completely change an organization for the better and forever, okay? And so if you want to think about how to lose a lot of money in the stock market, find a CEO that's not very focused on building a great culture with the company, and a CEO who's very unfocused and focused more on partying and things like that, rather than actually running that company to become the best it can. Look at the track records with these guys. Listen to investor presentations. You'll be able to pick up very shortly, especially as you get more and more experience in the stock market, the CEOs that actually have their head on straight and are actually focused on the right things rather than the CEOs focused on the wrong things. And I can usually pick it up usually within 20 to 30 minutes of listening to an investor presentation. I can pick up if a CEO really has his head on straight, he really knows what's going on with the business, what the industry trends are, or if he's a little lost and he's focused on the wrong things. It's pretty easy to pick up as you get more and more experience in the stock market, guys. So do those 5 things there and you'll become a much better in the stock market. And I hope all you guys have an amazing 2020 in the market and moving into future years. You can absolutely become a great investor, but definitely stick to these things back here. And always make sure you're making fundamental decisions on a company with the underlying business model in the framework before you think about anything else. Thank you for watching. Have a great day.